welcome to TraderMerlin Show. It is your Wednesday afternoon today. Oh, I guess I should probably turn my camera on. Oh, this is going to be a horrible show, everybody. I do not have my lights on today, so this is going to look really bad in the background. I forgot to turn on the lights. I was too busy talking to Jerry. I don't have my studio lights on today. Anyway, we'll do the best we can with the dimly lit room today. Anyway, welcome to the show. It is the second to first? God, I'm losing track of time. It's 2-1, not 1-2. So we are February 1st, getting the month of February underway with an incredible run. We'll talk later on about FOMC. We'll talk about Jerome Powell. We'll talk about Facebook and the ridiculousness that's going on over at Facebook. But let's get things started with our guest who is joining us, I'm assuming, from the great state of Chicago. We're going to have Mr. Jerry Baldwin joining us today. Jerry, how you doing, my friend?
Merlin, I'm fantastic, and I am in Chicago, and it is great to be with you as always. Things are fantastic. I'm super happy. Big day today in the market, some tremendous movement, and things are awesome. How are you?
I'm good. You know, I'm on the right side of the dirt. As my viewers know, I've been making some extremely aggressive plays on natural gas, which have bit me over the last. Today was a pretty brutal one. I'll talk about my trades on, but I still have till Friday till these options expire. But other than that, life is going great. I'm having had a great 2022. My 2023 is off to a really good start. So, you know, they say as goes January, so goes the rest of the year. So I'm hoping that my trading continues on like it has been for January. How about you?
Same. It's been great, Merlin. Things have been really good. Markets have been moving really well. We finally turned into a bullish trend after a long time of seeing a lot of bearishness, and so with that bullish trend has come some pretty nice opportunities, and the markets are drifting upward. As you and I, we and our viewers, we don't really care which way the market goes as long as it's moving, but it is moving and it's moving up. So it's been a really fun run, specifically later last week into the early part of this week. Capping off with today, which was just a insane move after the Fed announcement. So a lot of positivity and a lot of movement.
Let's talk about that Fed movement. Yeah, and yes, Liz, Chicago is now a state. I'm rounding it up to a state of its own.
Merlin, before you go on, so I love Family Feud and I love Steve Harvey.
Oh boy.
And the last part of that, they do that 20-second round where they ask all these questions, and sometimes he will ask, what's the most popular state of this and that, and someone will say like Las Vegas, and I was thinking of that when you did categorize Chicago as a state. So hey, as far as you and I are concerned, Chicago is a state. So there you go.
I like it. Yeah, I'm a fan of Family Feud as well. I think one of my favorite moments was Steve Harvey was asking this. The whole family lined up, says, give me a word that goes with pork, and the guy stares up at the ceiling for a second. He goes, Upine. It's like, oh, come on, man. Anyway,
it's awesome. It is awesome, and he's amazing on that show. He really is. I love him.
Yeah, his face says a million words without saying anything. All right, let's move away from Family Feud. Let's talk about Market Feud. Obviously, Jerome Powell, FOMC meetings today. Nothing out of the ordinary. Honestly, there was nothing he said that made you go, oh crap, these markets are going to soar or they're going to tank, right? It was overly cautious. The thing that he said was ongoing increases are going to be important. And I pay attention to that because it sets the stage for the markets going forward. Walk us through your approach to it, because I know that you don't really pay too much attention to all that's being said. You're more reactionary to the price action and maybe the setups beforehand. So walk our viewers kind of what an active futures trader perspective is of these days and what you looked at today.
Yeah, for sure, Merlin. That's awesome stuff. And I'll share exactly what I was looking at, and I'll share with you exactly how I was able to kind of gauge what the market had been doing. One of the things I've already said with regard to, the fact that we were in a bullish trend on the daily time frame on all four of the equity futures, gave us an indication as to which way it was going to go. And then, like you said, what's said is neither here nor there. It's all in people's perception of what's being said in terms of how they trade it. And so I don't trade, going into an announcement, and nor do my subscribers or the people that are in my room on a regular basis or my students. But after that news is out and you can see which way it's being perceived, that's when the opportunities, are often there. And it was the same case today. There was a candle that was clearly identified by one of the indicators that I use on my platform that showed us exactly where price was starting to go rapidly to the upside. But one of the cool things was that, knowing the trend of the larger time frames, which is so important, you and I both follow the multiple time frame analysis, seeing the trend there being positive, and then also seeing something that I've been using for the last maybe few months, several months, I've been sharing this with my students in my room on a regular basis, but you know what, Merlin, do you mind if I show share my chart real
Yeah,
quick?
go for it. Share your screen. Share away.
Let me,
And by the way, while you
yeah,
get
I'm
that
gonna,
ready, let me real quickly just for the viewers at home, you guys know I call it the popcorn trade of the day. This is a chart of what the market looked like going into the FOMC announcement, right? So it was fairly choppy, but getting near the announcement slowed down, and then it comes out and you have this whipsaw, huge move down, big move up, and then all of a sudden came crashing back down. And then, of course, Jerome Powell started speaking and gave a little bit of insight into what the Fed is thinking. And then that's when you had the huge move. And that's what I was saying yesterday. I said, it really is not about the 11 o'clock announcement. That's pretty much priced in. It's really the reaction to the press conference. And there was some good stuff. Bill Addis and I will discuss that in depth tomorrow. And maybe, time permitting, I'll go through some of my thoughts at the end of the show today. But let me get you over to Jerry's chart here so we can talk about what he was looking at and how this market worked for him today.
yeah, this was cool, Merlin. And it's like you said, going into the Fed announcement, you can see, look at this sideways. This is a 5-minute chart of the NASDAQ future, by the way. So, and you can see the sideways action going into the announcement, which is very normal, and then after the announcement, you've got, a little bullishness, a little bearishness, a lot of, indecision in terms of perception with regard to how it's being done. And then finally, right here. Now, many of your viewers, if they don't know, I run a room every day. I do a day trading room. I share these things with students who are in the room. And I never thought I would do it, but I've actually created an indicator that, helps us with regard to blending a couple of indicators that literally point to the candles that are, bullish or bearish based on those two indicators. And so this little blue dot down here, I'm going to move this other one out of the way for us, but this little blue dot, this darker one right here, that's my indicator. And you can see it actually did label the candle that we were talking about. And this was at 140 after things had gone, after things were announced. But it labeled a candle for us and showed exactly which way the markets, were actually going to start trending. You can see the move there. Now, one of the things that, and I mentioned this earlier, that kind of gave me a clue, and we were ready either way. I was ready either way. But one of the things that gave me a bit of a clue as to which way the market was going to go was this right here. So this is our famous radar screen, which you have made us famous for us, because I know you love this thing. I love this thing.
I don't know
I
if
had
I
a
made
lot
you
of help.
famous for it, but it's like, look, let's look at things from as many angles as we can look at it. And if all the angles say, hey, this looks good, then, we can look at the chart and make a decision there. But yeah, I think I like it because it puts everything all on one table and makes it very simple. Whereas a lot of people will start flipping through the charts and looking at stochastics, DMI, RSI, and just flip through each different time frame. Well, here I got all in one spot. So you got the one-stop shop. So it's kind of cool.
You're 100% true on everything you're saying, Merlin. The one thing, though, I want to emphasize what celebrities you've made us become. The fact that we now have our own cartoon characters. How crazy is that? So, for all the viewers out there, when you saw the promo coming into this session today, and you saw Merlin's little advertisement, we are now world famous. We have cartoons after us.
Yeah, this is artificially generated. Jerry, yours looks great. When yours came out, I was like, I like yours. It's happy, smiley. Mine makes me look like Putty from Seinfeld. It doesn't look like me, but it is what it is. Thank you for artificial intelligence for our wonderful graphics for today again.
I mean, to be honest with the viewers, I've not seen them yet. Merlin mentioned this before we started the show, so I'm so excited. I'm half tempted to leave this right now and go get my phone so I can actually see what we look like, but I'm so excited to see it. I'm sure you look fantastic, Merlin. So, and if you don't, it's the lighting. It's not you. So I'm sure you look great. So, oh, that's fun stuff. And we always have so much fun on this thing. I'm always enjoy coming here. So, but yes, back to business. So this is the radar screen. I had help in creating this thing. This is where I start every room. I start every session of my own trading. It's got, a ton on here. I mean, for those people who might be newer, yeah, we've got the equity products. I've got all 6 on here now, by the way, added on the YM, but I've got all 6 future, four equity future products, and then crude oil and gold. And those criteria and those products are chosen based on, ATR, average trading range, and also volume, to make sure that they're liquid, good, tradable products that produce, opportunities. So, but one of the things that I've been getting into in the last few months, and most people are familiar with moving averages. Most people will use one sort or another of a moving average. I mean, there's a ton of them out there. You can find them online. And but one thing I've never done, and I don't know if you've ever tried this yourself, but I've never tried. It's called a crossover. It's a moving average crossover where you take 2 moving averages, one's a greater number, one's a smaller number, and you are looking for consistency with regard to, the smaller number being ahead of the larger number, going bullish, or the reverse going bearish. So I put these on the radar screen, Merlin, and it really has been amazing with regard to even increasing probabilities more than what I was already doing. And we're doing awesome. And it's some really good low risk, high probability setups that I show every day in the room. But this has added something. So the point I want to make is that, and again, a quick lesson, 101 on these numbers. They're over here. Okay. I've got one moving average here, one moving average here, a quick lesson in how these are constructed. And these are all in my courses. And like I said, I talk about these in the room and I do them in coaching. But when this green number is greater than the blue number, it's a bullish trend. Okay. It's just simply it's one method of identifying a trend on a time frame. And so what I've done here is I've got multiple time frames. Now, again, these are my active trader windows. I don't mind sharing these. These are the time frames I look at with regard to not only, entry windows, or identifying the origin of a specific move on a smaller time frame with a 1 and a 5, but then also looking at what the larger time frame trends are doing. And go all day today. Okay. We had, and starting yesterday, we actually had the green number being higher than the blue number. So again, the perception of that is that the trend is positive. So, RSI, stochastic, these things were flickering. Okay. And at one point they were negative. But these never changed. So what I mentioned in the room this morning, and welcome to the viewers who are, seeing your show, and they love you, they love your show. They were in my room this morning. We talked about this, and I said, these numbers are all positive. So I'm not telling you which way the market's going to go, but I said it would seem as though very possible that, as these RSIs and stochastic numbers start to grow, we may in fact see a bullish number, and I identified Globex levels for them. And so sure enough, the larger time frame trends were all positive. The announcement came out. Again, there was really nothing in the announcement, but the perception of it right here with our indicator is boom, look at this move. And it ended up being, if we fib this off, I mean, that trade in and of itself in a little bit over an hour. Let me fib. I got these customized. Look at that. We're almost at a 2 to 1. We're out of time, but almost at a 2 to 1 based off that huge candle. So that's what I was looking for. And that's what my students were looking for, Merlin. It was pretty insightful, and it was pretty cool to see this thing go the way that it went.
Yeah, and it was such a shocking move as well. And I think what I gleaned from you pre and during this is, you weren't really actively trading the announcement when it happens. You're waiting for something to set up, and you had to be more reactionary to what price is telling you. And I think that's a really important piece, because if you were actively trading that announcement, I'll go back to my chart real quick, you got whipsawed. You got whipsawed right away. You probably went short because it started tanking, got in a short position, it rips upwards, got you out of your short position, got you in a long position, and then 15 minutes later, it screams down and stops you out of that one. That's just neck-breaking whipsaw stuff that's typical during these announcements. Now, as I've said many times, I'm sure some of you have written this one down, is don't trade the announcements, right? When those announcements come out, you know when they're going to happen. Because I literally, at every show, I tell everybody, here is the announcements coming out for tomorrow, and you know the release time. So you know there's going to be some crazy moves. Best thing to do is wait 15 minutes till after the announcement and then see what the market direction is. Now, I do want to go to one quick comment. Leave it right there, Jerry, just because I want to go to this question that came through in chat. Where is it? JR says, is this a particular brokerage dashboard? What are we seeing on the screen? So this is not a broker's dashboard. This is through a platform called TradeStation. And what Jerry's done is taken indicators that you may put on your price chart. So common things that we see on price charts are things like stochastics. You have RSI, you can see the headers there. You have DMI, which is directional market index. You have parabolic SCR, which is another way to read. It puts little dots on your price charts there to help you understand when it's getting bullish, when it's getting bearish, and potentially generate some buy or sell signals. What's really cool about this one is, you notice on the left-hand side, he's got all the different contracts. So let's just take that first block. You've got the NQH23, right? You see 5 of those, 1, 2, 3, 4, 5. Well, one's a 1 minute, a 5 minute, a 15, a 30, and a 60. So what he's doing is he's saying, in one screenshot here, I want to see what the NASDAQ futures look like with regards to all these indicators, which many of them are overbought, oversold indicators. The moving average ones give you a good sense of trend, so does DMI. And with that one little snapshot, I can look at all of these pieces and discern whether the indicators are telling me that this might be a more bullish or bearish scenario. And the reason I bring this one up is I had a question that came through on the YouTube page back in December when you were on the program last time. And I want to read this one. This is from Jack Frost. I don't know if Jack Frost is watching, but Jack Frost sent this one in, and I think it deserves commentary. Merlin, your guest speaker is an indicator-based trader, doomed himself and all of his followers. And I have to kick back on that or push back on that one a little bit, but I want to get your thoughts on that, Jerry. You know what? When someone says, "Oh, you're an indicator-based trader, you're just doomed to fail," what's your reaction to that?
Yeah, I think it's someone who just doesn't understand, a clear way of identifying the markets, because, we use indicators to help in decision making, but that's really all it is. We start with a price chart, and then we go to some indicators to help with identifying the trend. I've seen, a number of different places try to teach people, trend recognition on specific timeframes. And I'll be honest. I mean, you could see the presentation and it could be perceived 5 different ways. So it's very unclear. It's very subjective, which to me is not a good way to trade. I try to take as much emotion out of the trade as I can. And I think it also speaks to, that individual's, misunderstanding or not completely not really understanding at all, how some of these indicators are perceived. Because, to the public, they may be perceived as overbought, oversold, but that's not how I'm using them. And students who are in my room and who've invested in courseware with me or done one-on-one coaching, they understand exactly what numbers we're looking for within those indicators, but then also how we're using those numbers to determine whether or not a product is bullish or bearish in a specific time frame. So yeah, it's I think it's just it's someone who just doesn't understand as much as maybe they will down the line if they decide to pursue the right education. But I also use the analogy. I love the airplane pilot analogy. I mean, imagine a pilot flying a plane and not using his instruments to gauge what he's doing. I mean, talk about being doomed. I mean, that is the ultimate example right there. So if I can look at, again, there's no subjectivity here. I mean, this is as objective as it gets. If I can look at these specific numbers and these numbers in the market, and you can see it in what we do every day in the room and just how high a probability these setups are. So if I can look at specific numbers and know that, X number is being perceived as bullish, and I'm doing that on multiple time frames, the markets are sure enough more often than not going in that direction.
Right.
So
and I think
I just try to keep it as robotic as possible.
And I think the important part of that one is, if you get some positive indicators there, and let's say you're looking at your Nasdaq futures there, and your stochastics are looking positive, your RSI is looking positive, moving average is looking positive. That doesn't mean that Jerry's going to run out there and instantly hit the button. Right? If that's the case, then why even look at a price chart, right? So I think for Jack Frost, the mistake I think you're making here is these are all decision support tools, and I use them as well in my trading. And they're not the piece that makes the trade. And I would agree with Jack in one area, and that is if you're a trader that's just using an indicator and you don't look at price charts or have no really clue of how the markets work, then yeah, you are doomed to fail. But I think, anybody who's watched Jerry for a while knows that these aren't the piece that just makes the trade. It will alert him to situations where he can look at the price chart and say, okay, now let me make an opinion based off the price chart, look for some supply zones, some demand zones, and craft a trade off of that one. So I wanted to bring that one up because I think a lot of people think that if you even touch an indicator that you're an idiot and you're going to lose money, and I disagree with that. I think that they can be very helpful. Just make sure you don't lean on them too heavily to make your trades for you.
I agree, Merlin. I think it's very well put, and I think that's probably where the disconnect is that if one thinks that you probably could trade from this, if with the understanding that I have and some of my students have, you probably could trade right from this by going to some of the smaller timeframes and seeing exactly where the stochastic K line is with respect to the D. But that being said, that's not how we do this. Like you said, and you said it beautifully, this is really a screening process. What I'm doing here at the beginning of each room or as I'm starting my trading is I'm either qualifying or disqualifying specific products. Like for example, if I go to the NQ and all of my indicators, my checklist, so to speak, just before like you take off flying a plane, any airplane pilot's going to go through a checklist of things before they can go airborne. It's the same thing here. I'm going to go through my checklist on this specific product. If things check out, then yes, I'm doing exactly as you say. We're going to now a price chart, let's look to see exactly where price is trading. And then we can make a decision on, based on where and when, if we want to go, bullish or bearish. So yeah, it's really, I think, only the first step. And maybe that's where the disconnect is, because, yeah, obviously a price chart is where you're going to be placing these things from. And then I go into that aspect of it with regard to showing, okay, here's how we chart trade. Here's how we can trade right from the chart. Here's how we can use the matrix and so on. So yeah, no, it's definitely, it's amazing though. It's cool how you can screen these products out literally right from one spot, like you said earlier. And then you go to a price chart and you see exactly what's what.
Yep. Question came through from Rob. He says, how does Jerry populate that spreadsheet? So in real quick, I'll give you the 2 cent or the high level version. Maybe Jerry can add some more to it, but he's got a few asset classes that he trades regularly. And you can see most of these are, it scrolls down a little bit, but you've got NASDAQ, S&P, Russell, and the Dow. And I think do you have gold on there?
Yeah. Here you go. Here's
crude oil.
The last two.
Yeah, crude oil and gold. Yeah. So he's got really 6 markets that he's got on the spreadsheet. You could add as many as you want. And then he breaks them up. Since he's looking for active trading of futures, he sliced them into different time frames: 1 minute, 5 minute, 15, 30, and 60 minutes. And then he's simply added on indicators that for him and over his years of trading experience, those work best for him and alerting him to potential trade opportunities. Some of you might use different ones, right? Some of you might use, the Bollinger Bands and look to see if something's overbought, oversold. But all of these indicators, he's got 1, 2, 3, 4, 5, 6 essentially on there. Those help him, and then he can just look them all in one. Whereas if I go over here and I add on my moving averages and maybe my volume and ATR, I can have them on my chart, but now I might be distracted by some of the other graphics on my screen. Whereas in that table that he has, it just makes it very easy to see it all at once. And why did you choose those indicators? Why stochastics, DMI or ADX, RSI, moving average, and parabolic SAR?
Yeah, probabilities. Studying these indicators over years and years and finding which ones worked and which ones, I shouldn't say which ones were higher probability and which ones were really successful in terms of gauging trend. And I think that's the way that I use most of these, probably more so than the others. Because Merlin, imagine that, because there's 6 here there's a 6-piece checklist here. So imagine and it does happen pretty often actually with the time frames that I'm using, but imagine all six of these indicators being in line or being perceived as being bullish, let's say. And all of a sudden, people who are indicator based, and everyone, like you said, is using some type or some combination of indicators. All of a sudden you're, a stochastic trader and you're bullish. You're an RSI trader, you're bullish, DMI and you're bullish. So imagine all those things being in line. What are the probabilities of price actually going up?
Yeah, it certainly is better.
It is, yeah, it's incredible. And that's how I try to line these things up. That's why these time frames are, kind of proprietary as to what I do and how I've been doing it. And even the indicators, as far as, how I came with choosing the ones that I'm using. And they all correlate with one another. Like I said, it's a very, they all blend really well. So you might not see as many opportunities, when you're waiting for things to align, but the ones that you do see are really high probability. And for me, that's what I like, because you and I, nobody likes stop outs, so whatever I can do to minimize those as best I can, that's what I do. And this has helped a tremendous deal.
Love it. Mark, does TradeStation feed directly into the spreadsheet? Yes, it does. So Rob, he has put in the symbol column there on the left-hand side, Jerry will put in those numbers, right? It says here's the symbol, and then he will, on the interval, he will change the interval to a specific time frame. So really the only 2 columns that Jerry's going to be changing is the first one, which says here is the NASDAQ current futures contract on a 1-minute time frame. Right below that, NASDAQ 100 future contract, 5-minute time frame. TradeStation will automatically fill the data into all of these fields. That's automatically done because he's got a subscription to TradeStation here. It's called the Radar Screener, which honestly is an incredibly powerful tool that I don't see really on a lot of different platforms. And I do use scans and filters. I mean, even things like TradingView. You look over here and go to the hot list. Well, this is essentially a scan and a filter to find things that meet specific criteria. But Radar Screener and TradeStation is far and above what TradingView has with regards to functionality.
It's very cool, Merlin. And I'll be honest, I mean, TradeStation there's a lot to it. And when I first started, I wasn't a big fan. I wasn't crazy about it. I grew to love it over doing it. And this radar screen, I didn't fully comprehend when I first, and this, I mean, we're going back over 10 years, but, I didn't fully comprehend, what it could do. And now understanding it at the level that I do, it really is. I mean, I haven't seen anything else out there comparable with regard to being able to scan opportunities and then customize, like you said, when I first kind of got familiar with this thing, I'm like, I wonder if I could put this in. And I did. And then I'm like, oh my gosh, look at this thing. It's showing me exactly, what's going on in that particular time frame on that asset. Now, all of a sudden, if I blend these, wow, look at the probabilities and then look at the follow through on price. So it's really, it is really amazing. And anybody, and I know you'll mention it near the end of the room, but anyone who wants to come into my room, I've got a, there's a subscription to do it. I do the room 5 days a week, and I will walk you through, how I customize this radar screen. I've got this in courses, but I also talk about it in the room. So if people are looking to, go to another level with this, they are more than welcome to come in, and I'll guide them like I do all of my students, but specifically the students who come from your show. So,
and then I'll clean it up for you, because I see 4 columns that could disappear right now. That the overbought, oversold column under slow stochastics, you can just get rid of those, because it's 80-20, right? It's always 80 and 20 all the way down, so you can take those ones out.
You absolutely could. Yeah, that's one. There's probably actually a couple of columns I could do to save
under
space.
RSI. You've got the overbought, oversold indicators. They're both at 50 all the way down, so you got wasted. You could squeeze another indicator in here, brother. One more for the road.
I'm good, man. I'm staying right here. I'm good with the number of indicators. I try to keep this simple. So and believe me, as you do this and you understand this and you spend, a couple of weeks with me, it does become simpler. I will say that. So, but no, you're right. We could squeeze space even more. And that's the other beautiful thing about this, though, is that you can customize this. Like I do coaching sessions, and I know you mentioned this later too, but I do the one-on-one coaching sessions. And so I see some of my students, radar screens, and some of them are exactly like this, but some of them are tweaked a little bit. And that's the beauty about this thing, is you can customize it to do whatever you want it to do. And like you said, you would eliminate a couple of columns, and I don't blame you. I probably would too, but I didn't feel like doing it. So
you want me to, I don't know if have you ever used, I'm going to totally just tweak your head here a little bit, but have you ever used percent, what is it, stochastics percent, what is it called? Oh, man. There's an indicator in there. So basically what you can do, you've got slow and fast-moving stochastics on. They have it...
Well, I've got slow. Just slow is what I have.
Right, but you can go in there and basically remove all 4 of those slow stochastics columns and replace it with one column, which will show you how far above or below the Bollinger Bands, it's Bollinger percent B, I think is what it's called, but it's actually with Bollinger Bands. I think you can do it with stochastics as well, to show you how far above the Bollinger Band lines it is. And that's the one that I love to use, right? We all have different indicators we like stochastics I'm a fan of. I don't really use RSI, but I know people love it. But Bollinger Band, I forget what it's called. I think it's Bollinger Band percent B is one of the coolest indicators in TradeStation. I haven't found it anywhere else.
You know what? That's cool, Merlin. I'm going to check into that, because I know exactly what you're talking about, because basically what you're saying is that, like for the stochastic, and my students will understand this, is that it's giving you the percentage positive or negative difference between the K and the D line, which is ultimately all you're really looking for. Right. So if that can be done, that is very, very cool. And with regard to the Bollinger Bands, if you're using that indicator, that is a really cool way to understand. And like you said, just think about how simple that makes identifying the trend on that particular time frame. The number is either positive or negative, right. and obviously one represents bullish one. So to me, that is very objective. That is very black and white. That is really clear to understand. So I love that. One thing I do want to clean up, though, with regard to RSI, is that I don't use RSI conventionally. I know RSI is also an overbought, oversold, which, right. If you're using stochastic, you have no reason to use RSI. The difference is that I don't use RSI that way. I use RSI simply as a trend indicator, so that it is either above a certain number or it's below a certain number, and that is then perceived as bullish or bearish. So just to be clear on how I use RSI, because there's no reason for the redundancy of RSI and stochastic together, unless you've got a unique use and application for RSI, which is what we do.
To show you guys kind of how different people use it, here's my filters. I have multiple ones, but this is just a view, and it is called Bollinger percent B. You notice over here, I basically have taken the S&P 500. So Jerry was talking in specifically futures. I could do the same thing with futures. I would just, on the symbol side, put in all the different symbols that you want to watch. But in this case, I'll double click this percent B, and what it's telling me is right now, electronic arts is 29%. 29% below the lower Bollinger Band, which really tells you what? That this thing is extremely oversold right now. So I can go over here and look at EA. I don't know, my TradeStation has been giving me all kinds of fits, but I'm about to look at a different platform, or I can double click it again and show me everything that's above the 100 period, the upper Bollinger Band. So right now, out of the S&P 500, it looks like we have presently 70 of the S&P 500 are over their upper Bollinger Band, which means things are gratuitously overbought at this moment in time. I also have a little scanner here for hammers and shooting stars, right? Here's hammers. I've got PayPal, Darden Restaurants, and Caterpillar all have a hammer formation today. Shooting stars, well, we have nothing with a shooting star today. I got bullish haramis, bearish haramis. So I love the radar screener. I think it's a great tool. And, this is just shows you different strokes for different folks as far as filtering. Jerry's using these to bring his attention to specific trading opportunities for the day. I'm looking at them on mine for the same thing, just looking for different parameters and different things to be drawn to my attention. So anyway, I show the compare contrast there.
It's so much fun, Merlin. I talk about, before we do a show, I talk about this like for a week in my room and just, and like I said, they love you. And that's one of the cool things about when you and I get together. There's so many, we've been doing this for so long and we do it at a really high level because we put a lot of effort into this, but to be able to share these kind of stories, you and I, it's really cool. And it's you and I who benefit, but it's the viewers who benefit because they get some really cool content. And then they're able to kind of take that, customize it, and putting it into their own trade plans and, grab whatever makes sense to them. So this is awesome. I love doing this with you. You're amazing.
Always fun. So let's kind of wrap things up here. You have let's go out to Jerry's page there. This is his page, which is Pacific Shores Trading. He's got coaching on here. He's got live trading as well. He's heard him talk about some of his coaching and live trading aspects. So if you want, go to pacificshorestrading.com. My computer's running slow. He's got one-on-one consultations. He's got a live trading room that he runs. Is it daily? What's your schedule there for your trading room?
Yeah, so we do a daily trading room every day, Monday through Friday. We start at 10. We go depending on how the market's moving. We'll go to 11. We'll go to 12. It just depends on the market, but we do start every day at 10 o'clock, Monday through Friday. So it's a blast. And I've had a number of students, specifically in the last time you and I did this, who've come from your show. They came into the room. They're now getting involved in courses. They've done coaching with me, and they're seeing some amazing progress in their own trading, which has been really cool that you and I were able to, positively touch these people. So same offer to people, who are watching today. If they want to come into the room, I've got a bottom line price there, which is really inexpensive. I think it's like $70 a month. That's every day. All the shows are recorded so they can watch them in the evening if they're not able to be there live. I'm going to do a price increase probably mid-February, the 15th, but anybody from your show, I'm going to lock that low price in and keep it there. So yeah, the one-on-one coaching, the daily trading room, and then I have courses on there, which really explain they're on demand so people can watch them as often as they want, but they really get into the detail of, the indicators, how I use them, trading methodology, trading odd numbers of contracts to manage risk, and radar screen. There's a ton of great stuff in there that I make available to students, as we go forward. So yeah, I really appreciate you sharing it with them, Merlin. My
pleasure. Well, hey, thank you for all that you do. I love having you on today. Maybe we'll get you on another month or so and continue to talk about active trading of futures. And love it, man. I love that you share your insights with everybody and what you do. So thank you so much for coming on today.
Merlin, thank you so much for doing what you do, and appreciate everything. You've been doing it at a high level for a long time. So thank you for everything. And yes, we'll look forward to doing this again soon down the line.
Sounds good. Take care, man.
Thanks, Merlin.
Guys, that was Jerry Baldwin of Pacific Shores Trading, giving a little insight into what he sees in the markets going on right now. And the unique part about that is, Jerry is an active short-term trader, and you have different guests in this program. You have people like myself who are going to be more, I guess, interested in the big macro picture and how all these pieces fit together. The other side of it is what Jerry's doing, which is, and Debbie Haig was the same way. I have a lot of other people that I've interviewed over the years that they could care less about any of the macroeconomic data. No GDP, no CPI, ADX. They don't care about any of that stuff. Just show me what that price chart is telling you. And there's two schools of thought there. One school of thought is, oh, you're limiting yourself because you're not aware of some of the major macro pieces. The other school of thought is you're doing yourself a service by not paying attention to all that stuff because it just gives you this convoluted impression of what the market should be doing at any moment in time. So Jerry's definitely on that one side of the spectrum and says, yeah, I know this stuff that's going on, but price is the most important thing. And, to Jack Frost's comment here, and I hope that he's watching, it was a salty, kind of bitter comment. I disagree to say that anybody who uses indicators is going to doom himself and all his followers. I absolutely disagree with that one. And I think it's more important, how you utilize these things. The analogy that I'm going to give everybody, and I think I've done this one before, is when you look at that spreadsheet, he had stochastics, DMI, moving averages, and RSI and parabolic SAR. So it's like 5 or 6 different things. And here's Mr. Horrible Analogies perspective on that, and this is for Jack Frost out there. When you make a trade, you have put on that trade. That is your choice, your decision for whatever factors it is. Now, you could look at some other pieces which may support or contradict your trading decision, right? And the analogy that I've used over the years, I think it's a pretty damn good one. Some people find it offensive, but you know what? I'm not worried about it. If you find it too offensive, you can always stop watching the show. Don't leave. The analogy is this. Let's say you're going over to your family. You're going to your family's house for the holidays, and you're bringing your girlfriend that you've been dating for, I don't know, a few months, right? Still a newish relationship. Everything's going great, and now it's time to meet the family. So, you walk your girlfriend or boyfriend, pick whatever it is, boyfriend, girlfriend, it doesn't matter which side. But let's say you walk through that house and you introduce her to Aunt Stochastics. And then there's cousin MacD. And then there's brother RSI. And here's parabolic SAR, the cousin long lost. So the point is, every one of those family members is going to be an evaluator of the trade that you're in, the girl or guy that you're with. And if you walk through that house and at the end of that Christmas dinner, holiday dinner, whatever it is, if all of them are going, hey, she's fantastic. What an amazing woman. We really like her. Then you feel much more confident in that trade that you've been making. Now, on the flip side, most family members are going to be pretty nice and courteous, but you might have those family members like, man, are you serious, dude? That girl is a slob. Do you see the way she was eating? She totally disrespected grandpa. She chews with her mouth open. She was rude. If all of a sudden your family members are all telling you that there's some bad news here, maybe the trade shouldn't be taken, right? And you still have to make that decision, but at least it's decision support. And in my world, these indicators are like family members giving me information and perceptions of a security that I may not have seen on the price chart. Now, I'll be honest, at this stage of my trading career, I don't really need all those indicators. It's easy for people to look at. Like the grid that Jerry had, I think is awesome. It really quickly, very easily shows you all of that stuff in one page. And I think that's a great learning tool and to help you. But and I think Jerry does that predominantly because, he's got a trading room and he's teaching and it helps. I'm pretty sure that he doesn't need all that stuff on a regular basis to be making trades, right? You can look at a price chart and tell what the stochastics and Bollinger Bands and MACD, RSI, ADX, you look at charts long enough, you know what the indicator is supposed to tell you, how it reads information, then you can tell what it's going to be doing on a price chart. So, anyway, Jack Frost, had to go after you on that one just a little bit. Nothing bad there. Just wanted to make sure I got that question answered for you. All right, let's see. What did Larry do? Traded strictly one micro futures contract at a time. Satisfying. Good. And then if you're trading the micros, then you move up to, go from 1 to 2. I agree with most of the futures traders out there, which is you should trade multiple lots. Therefore, you can scale out once you hit your target 1, 2, or 3, but you can't really do that with one lot. So you start to get better running trades, better trends going if you have multiple lots. I'm with you, Big Eb. Too many indicators puts you into a paralysis. I mean, you guys know, how often have you guys watched this show? My charts rarely look like this. Right? Because I don't have moving averages on, and I don't have these on there. I mean, I think that people that watch my show think I may not know what I'm doing. They're like, oh, you must not know what you're doing because look, you're just looking at price. Well, guys, I don't need those in. I can tell you what the moving averages are going to be doing. Just give me a time frame, and I'll tell you what it's going to do on this chart. I can tell you what ATR is going to be. ATR is going to be surging right now. Why? Because it was flat over here, and now all of a sudden it is spiking. So I can add ATR on this screen, and oh wow, lo and behold, it's surging. Now, flatlining now because it hasn't been moving up. Anyway, you want to really learn these things. You should look at a price chart like this and pick an indicator and say, okay, I want to look at moving averages. And then say, when I add the moving average, what's the line going to look like based off this chart, right? And go out to a daily time frame or whatever time frame you want and quiz yourself on it. It's just a very easy way for you to learn what the indicator should be telling you. And like Big Eb says, you get too many of them on there, yeah, you'll be like a deer in the headlight. It's horrible. But if your brain knows what they look like without having to actually see them, then it doesn't freeze you up, right? It doesn't freeze you up. It just actually makes it really simple. I mean, right now, you've got a ton of stuff that's saying it's overbought. Right, you got overbought situation going on in the broad market. You have a lot of other factors saying, "Hey, you got a real strong uptrend." If you put on your 20 Your 50 should be just curling up. Let me see if I'm right on that one. Let's see what our time frames are here. I'm going to have to go to settings to find this one, but there's your 10 period moving average. Let's go to 50 on this bad boy. All right, so the 50, not even curling. That's a 200. Anyway, sorry, hold on there. There we go. That was a 200. Okay, so 50 just starting to curl up. The 20 is going to curl up even sharper. Anyway, I could just beat this one up till I'm blue in the face, but I've looked at millions and millions and millions of charts. Take the indicators off. Do yourself a favor. The better you get at this, the less you're going to have on your screen, because your brain does not need to see, your eyes don't need to see a line on the chart. Your brain can process that information behind the scene. We have the best CPU on the planet in your head. So don't add all this stuff onto your chart unless you absolutely need it to understand what's going on. All right. About more cues. Oof. Yeah, I'm going to wait to see tomorrow. I think you're going to get a pretty good gap up based off what happened with Facebook. So that said, let's dive into what happened out there today. Man, I did not think that this was going to rally like that. It was caution to the wind. It feels to me like this market is setting up for one of the biggest bull traps. I wanted to talk more about the Fed tomorrow with Bill Addis, but I'll give you my cursory thoughts here in just a second. Here is what happened out there today. Now, you look through the economic calendar, a lot of it was nothing really special. We were bad for the U.S. on ISM PMI. See, that missed. We were slightly better on manufacturing PMI in the final. JOLTS job openings was a little bit higher, which great. Man, that means more jobs are available. Construction spending declined. Not great. Manufacturing prices at 44, so still things look fairly decent. And then, of course, we got the Fed funds rate, which jumped 25 basis points. Wow, was anybody here surprised? Come on, yes or no? I think it actually helps the chat bot. Were you surprised, yes or no, that we raised 25 basis points today? I mean, I've been showing you every day, pretty much every day for the past month, this screen right here, which is priced it in. Again, this is what the real money is doing. These are the Fed funds futures, and we already have the current one in. Right now, we are at 450 to 475. We jumped 25 basis points today. The expectation is right now there's an 85% chance that we're going to see a 25 basis point increase at the next meeting. There's a 14% chance that we're going to see no increase. Now, is this a surprise? No. This should surprise absolutely nobody, because Jerome Powell said, and I have my little cheat sheet right here, he said ongoing increases are appropriate. And he said that like 4 times in his speech. He also said a couple of more hikes. So to think that this next meeting we're going to get no increase, we would have to see between now and the next 8 weeks such an unbelievable change in economic data. He made it very clear. He said, I want to get to the point that it's a restrictive stance for some time. Okay, we have to do substantially more. We have to see substantially more evidence before we start to cut. Now, that doesn't say we are data-driven. That says we need to see substantially more evidence, meaning a lot of this data is still confirming that the Fed's actions are correct at this moment, which is raise rates. So, it would be shocking to me. We'll look back at this show and hopefully, maybe I'm wrong, but it would be shocking to me to see at the March 22nd meeting that we didn't raise. I'm right here at this 85% probability. I think that's what's going to happen. We'll get a 25 basis point increase. The only way this number is going to change dramatically is if inflation all of a sudden continues to fall aggressively. I still think we're getting 25 basis point increase. If we start to see inflation spike, then the discussion may be for 50 basis points, because he made it very clear. It's more risky to not do enough. So he says, I'd rather do too much than do too little. So no surprise. So that begs the question. If we had a extremely predictable event today, which was 25 basis point increase, then why in the hell did we get that move? And again, this is after Jerome Powell's comments. He did not paint a rosy picture. He painted that, down the road, yes, they may start to stop raising rates and maybe cut. But he basically said, the job market's a big question. Demand right now is greater than supply, so job market looks good. I know, Big Eb. I'll get to that in just a second. Obviously, that one hurt me today, but we're not done yet. they're unwinding their balance sheet. This to me is a very unnecessary rally. I actually thought it would be kind of a whipsaw and then basically chop sideways, because I didn't expect him to say anything different, and I really don't believe that he did in his press conference. What was interesting is that he said we have to see substantially more evidence in order to cut, and also ongoing increases are appropriate. Couple more rate increases. So nothing about stopping and still more about raising rates. Now, they had their price target for the end of this year at 5.5%, although he did say in that meeting that in March, they're going to reassess and reevaluate their forecast. So that forecast may actually change here a little bit. Watch what happens in the federal spending limit. Well, the old debt ceiling, huh? So let's real quickly look at what happened. That was obviously the big economic data, but here's the earnings side of things. Check out what happened with Meta. So Meta beat earnings. They were supposed to report $2.12, came out at $3, so a 41% beat on earnings. Great. They are absolutely screaming in the after-hours session. Let's go Meta. It's up 18.6 right now, so spiked up. They also said a couple really important things. Number one, they said, we're laying off 11,000 people. Number two, we're doing a $40 billion buyback. So this goes to a question that came in a couple days ago asking about, layoffs. Isn't that a bad sign? Someone said, isn't the layoffs a bad sign? And my argument was, not necessarily. For a lot of these firms, when you're trying to grow as fast as possible and roll out as many new products as you can during a bull market, you're bringing on so much extra help that out of, let's say, 1,000 people you hire, maybe 100 of those are worthless. They're not really doing much. They're just sitting around the cafe getting the free lunch and prime rib they serve at Meta's cafe or cafeteria. When things start to look a little bit like economic crunch comes, that's when your managers really step up and do their jobs and say, all right, let's do a performance review. Kevin, you suck. Beat it. Hit the bricks, right? That's what they're doing, I think, is getting rid of a lot of the dead weight, maybe in departments that aren't really growing or showing the rate of return that they need. So it's no surprise to see layoffs coming for Facebook. What was a surprise was the $40 billion buyback. That is pretty big, and that's what caused this huge surge tomorrow. I will be up early watching this one. I may go out and be aggressive and buy some puts on this market like Big Ed was talking about. Really shocked to see. I would have been surprised. Would not have been surprised to see them do their share buyback a while ago when their prices was so low. Facebook was down at $87. Now we're already 100% higher than that. And by the way, just for giggles, I drew this line right here. You see this red line? You think quite often when you get an uptrend and a big gap. Let me ask you this, just as a group here. How much time we got? If you're looking for a shorting opportunity and something's running up and does a big gap up, where would you be looking to short that security on a big gap up, right? What are some of the things you'd be looking for as it Yes, we have. Now some of the workers' shares usually go up, right? Because you're trimming the fat. You're trimming maybe people you're paying too much, right? You might have brought in someone you paid too much for that position, or they're underperforming. Look, if you're paying $100,000 for an employee for a year and they're not giving you $100,000 worth of value to your company, you should cut that out right away. That's bad debt. That's not going to help your company grow. So you're actually the other way, Glenn. It'd be the opposite way. If I see something like this price chart right here, and it's got a great trend, and it's gapping up tomorrow. You can see down here, right here in blue, I'll highlight it. I think it's highlighted blue. Oh, it's not highlighting at all. We're currently trading at 181.40. That's an 18% gap up. So if we open up tomorrow at this upper red line, I would simply zoom out and see where we're gapping up into. And notice it's been this, we have not been able to break above this since June of last year. It's hit it once, hit it twice. So this is not a great supply zone. However, it is a supply zone. It's a location where price has stopped and turned. So this could be a very good shorting opportunity in the morning. Again, you want to wait and see what happens. Don't just jump on it short because price is at supply. I would want to wait and see kind of what happens with that in the morning. So interesting to see the gap, huge right up in overhead supply. Might be a little bit of profit taking there, although it's hard to short something that just said they're going to do a $40 billion buyback. Other companies that reported earnings out there today, you had Novo Nordisk, Thermo Fisher, Novartis, and T-Mobile, and most of those, no big moves there, but Meta really was the big one. Turning uptrend, turning reversal up. Yep. And let me see, since I'm near the end here, there were a couple pieces I wanted to get to. So LOL Lot. LOL Lot says, how do we know 60% of net gains or futures trades are treated like long-term capital gains? When you get your statements from your futures broker, it will tell you these are your futures trades. That goes down on, I believe it's an IRS document. Oh, it's been a while. I think it's called a 6781. It's a document you have to fill out that basically is for futures trades. And then with that document, it gets broken up into 60/40. So that's you have to put in a specific form. These are my futures trades or options on futures trades. And there's still a couple other things where you can get that preferential tax treatment, but that's pretty much it. So no tax software needed. You just put in that spread in that form, the 6781. If I have a CPA in the room, correct me if I'm wrong, but I'm pretty sure it was a 6781. I have to fill out every year. And let's see. I'm gonna wrap things up here. I have more questions I got to get to, but I gotta end. I got things I got to take care of. Biden wants a 1% tax on buybacks. What are your thoughts? I don't know. I'm really not a big tax on everything kind of person. Personally, I think you already pay enough taxes on. If you're paying capital gains taxes, that should be enough. So I don't think it should be a tax on buybacks, but why not? Who's that tax gonna hit? It'll hit us because that's just gonna get passed through. If you have Facebook now having to pay a 1% tax on all the buybacks they do, certainly it adds a couple extra bucks for the government. But at least from my perspective, I know I might have some disagreement here, and I hate talking politics for this specific reason. I think the prudent thing to do would be to if Facebook's going to look at their business and say, here's 11,000 jobs of people that aren't doing anything or we can do without and get rid of, our government should be doing the same thing. There's so many departments and little services, things that we just don't need anymore. And we could probably save a lot more money there than adding more taxes on and just spending and spending and spending. Anyway, let me see. Let's go to what's happening for tomorrow. So it's not just the U.S. central banks. We obviously had international banks as well reporting. Tomorrow morning, 7 a.m., you're going to get the Bank of England coming out with their rate hike. That's expected to be 50 basis points. Now, for anybody who's trading that British pound, that could have a huge impact on it. And the British pound has been sitting at supply in a beautiful uptrend. Let me bring it up for you. There you go. There's your British pound. It's been on a great uptrend. That rate increase could have an impact on this British pound. No, undoubtedly will have an impact on this one. So keep your eye on that one if you're trading the British pound tomorrow. But that's not it. We got more. You also have the main refinance rate coming out for Europe. That's going to be 8:15 a.m. Eastern Standard Time. That's also expected to jump 50 basis points from 2.5 to 3. And the euro has been the knight in shining armor, if you will, of the Forex world. Check that out. It has been, since I went to Europe, remember I went there October 1st. I was literally dead low. It was great because things were I got a lot more money, bang for my buck. But now we're back up to 1.1. We were down at 96. So that is a gigantic move for the euro. Again, rate increases and rate increases from central banks can have a big impact on this. Right now, you've seen a 15% move in the euro in the last 90 days. Pretty impressive. And I think that will do it. What other questions do I have here as I wrap up? When is Gabe Velasquez be on your next? He's one of your former guests. He was on the program one time. I said anytime he wants to come on, he's welcome to. He hasn't reached out, and unfortunately, I haven't reached out either. Here's the thing, and this sounds very self-interested. If you notice, a lot of the people I bring on are people that I know and trust. The people that I would say, okay, for the most part, I think you guys are good and I trust you. However, there's almost nobody that I've brought on that has a following, like a big following. If I want to grow this channel, I can't bring on people that have 200 followers, right? While they may give you good information, it's not helping me in any way. It helps you guys because you learn from them. But what I need is someone who's got 100,000 followers or 1 million followers to watch this show, because then I can start getting some more followers and, maybe, you have a little bit of money to pay for this show and all the time and effort that goes into it every day. So I'm trying just to do the show by myself. Maybe I'll bring on more guests, but I just have to go out there and find people that have more followers. It's going to help. It's self-interested, I know. I hold striker in my longs. Oh, yeah. That was if we look at the TradeStation one, that actually came up in my, I don't like the symbol. Psych! you're up. It's 139% above the moving average right there. So you are in an extremely overbought situation there on SYK. Oops, let me go over here to the chart. Yeah, nice. Good job for you on that one. I'm still long British Petroleum from a BP. What? You're still from $1? Was this thing ever $1? Let's go .w. Recall this being that low, but yeah, I don't see that being that low. Anyway, let's see. Yeah, Velasquez, Sykes, and I think I got most of your questions out. How much will this affect natural gas percentage-wise? So, boy, natural gas. Let me get out of the TradeStation here and go back to TradingView. Natural gas got a meltdown today. So I still have 2 days. I have until Friday till these options expire, and then if I get exercise, I'll call or sell calls against them. But natural gas has been just absolute crime scene murder, brutal. And a couple days ago, actually Monday. The way we were falling, I was like, it's due for a bounce here, and my timing was way off. So I still have 100 BOIL, BOIL, at the $7 strike. So right now you're at 628. It's up a little bit in the after-hours session now, but BOIL, if I got exercise, it's like I have 40 cents as the premium I collected, which makes 660 my average price. So right now, at 635, I'm down 25 cents per share, so that's going to be $2,500. So not too bad, but I'll sell calls against it for the week, and I will continue to do that until I get my dollar cost average. The bigger question is, what the hell's going on with natural gas? Like there's talk track now that's going to go to zero, and I'm like, I don't buy it. I mean, natural gas is down 75% since that peak we saw back here in August. Yes, I get it's a warmer winter than normal. Ain't that warm. I mean, if you look at this price chart, this is like saying that the U.S. is like the Caribbean right now, right? This is Club Med. We're all just sitting outside by the pool drinking martinis in our board shorts. No, there's people still freezing. I think I just saw, was it Tomasino's? You're freezing. And by the way, I got your picture. Come on, you got to parade that thing around the entire day. You put that jersey on, you walked outside, took a picture. And you got a Brock Purdy jersey. Come on, man. You got to support, represent. And I made sure I got you a nice jersey. I didn't buy you a piece of crap t-shirt. That's an actual NFL official jersey. That was an expensive jersey. You better don that when the Raiders are out of the playoffs, like every year. You better be wearing that one. Glenn, good question. John Rowland will be on the program on Tuesday, this upcoming Tuesday, and shed some light onto this one. One thing I do like about specific commodities is, no, I won't share it, Thomas. You said no, I won't share it. I will respect your wishes. One thing I like about commodities is generally they're not going to go to zero. Now, I say the word generally because in 2020, when crude oil went to negative $40 a barrel, my jaw hit the floor. I've never seen anything like that. How could it possibly go to negative 40? Well, that wasn't really the price of oil. It was the cost to store the oil, and there was no place to store it. With natural gas, do we run into the same situation? Right? Does it go negative? I don't know. I don't think so, but I've been fooled before. So I'm thinking, at least from my perspective, longer term here. BOIL is a dangerous one because it decays over time because of its leverage. But you look at the price chart here of natural gas. We're quickly heading back to lows that we didn't see since 2020. Now, obviously, that big uptrend line we have there has been broken. Increased production, demand has been dropping. Rob, crude oil went to negative $41 per barrel. Check it right here. I'll bring up the crude oil chart for you. It was jaw-dropping, and the reason was crude oil is a physically delivered commodity. So what happens if you're holding a crude oil futures contract at expiration, then you would take delivery of that, and you have to find a place to put it. All right, you can't just load up in your front yard. So it went to negative $40 a barrel because there was all storage was full at that point. There was no place to go. So that was a rough one. Very, 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 very rough one. Anyway. No, Tom, she won't do it. So no, a lot of this is demand. A lot of it's demand, and just the Weather Service said by the end of February, it's going to be a nice warm climate here in the U.S. Okay, great. But I don't think natural gas is going away. I mean, that's kind of going to zero assumes that no one will need natural gas anymore. And maybe was talk about that stupid proposal to ban gas stoves. Come on, man. That's just ridiculous. So anyway, I don't know. I think that a company can go bankrupt but a commodity most likely will not. Corn, wheat, soybeans, natural gas, crude oil. We're going to be using those things no matter what. So it's about finding the right price. Yep, Big Eb, I will as well. Not only that, I will mortgage my home and buy all the natural gas. Remember when we, what was his name? We had a guy in this that was one of the regulars, and he was just a loose cannon, wild guy, extremely opinionated and political. What was his name? You guys all remember him? Not Randall. Not Randall. It was something like Randall. Anyway, he was telling me that he was gonna. I think he was asking me what price I should buy oil at, and I was like, "Look, if it gets below 20, then you should load the boat on crude oil." Now, it went to negative 40. So if you had the futures, you were screwed. But if you bought USO, if you bought UCO, these leverage instruments would have been really, really good ones. 4 o'clock management, is it our? Oh, damn, nabbit. You guys, I thought when I looked at the clock, it was 44. I thought I had 15 minutes, and then you got me on a rant and I had to answer your questions. All right, I was supposed to no, it wasn't Randall. It was Ruben Landon Dante, or Ruben Dante Landon, something like that. It was Ruben that guy. Very interesting interesting cat. Anyway, he was telling me, I forgot, he was contradicting everything I was saying about crude oil. I'm like, buy it at 20. I back the truck up if it gets to 20, and it totally didn't. All right. Let me wrap things up here. I'm done. I already showed you the economic calendar for tomorrow. I showed you the earnings calendar. No, I did not. Here's your earnings calendar for tomorrow. This is the big day. Now, we talk about popcorn trades of the day. Tomorrow, you have a trifecta. Monster companies reporting earnings tomorrow. Again, it's about NASDAQ. And obviously, Facebook helped NASDAQ tremendously today. What do we have tomorrow? Apple, Amazon, and Google all reporting aftermarket close. I don't know which one to watch. Apple's probably the most impactful one there, but Amazon and Google will also be fantastic, bouncing all over the place. Aftermarket close, you also have Gilead Sciences, Starbucks, Qualcomm, and Ford. And then before market open, Bristol Myers Squibb and Merck. So it should be a pretty exciting day out there with regards to earnings. That, my friends, is your show for today. Tomorrow, we're going to have Bill Addis on the program talking about bonds and interest rate policy. Might be some interesting pieces that he talked about that weren't quite mentioned in mainstream media. We'll see what Bill Addis has to share with us. If you have bond questions, let us know. Send them on in at TraderMerlin@gmail.com or put them down below the YouTube video. As you guys know, I will not post a WhatsApp number and try to solicit you for money. I'm not going to sit there and say, hey, let me manage your money. So if you ever see anything like that, just report it. Some of you guys sent me some screenshots talking about some guy trying to scam for money, and here's a WhatsApp number. Don't ever call that stuff. I'm not going to ask you for money. You can email me at TraderMerlin@gmail.com with anything like that, and I'll do my best to shut it down. That said, hope you guys have a fantastic remainder of your day. Let's see what this gap up does tomorrow for our NASDAQ and Meta, and I will see you on tomorrow's show with Bill Addis. Take care, everybody.